everybody. Good morning on YouTube and Twitter, and some people listening in on my stream, and you'll probably better hear it if you're a subscriber to me. You'll probably hear it better if you're listening on YouTube or X because it's a different screen share. Anyway, okay, so quick recap of last week. Last week we had a lot of IC whale kind of trades, and those levels got broken a few times. The ranges were kind of narrow, and we have this new player, or not that new, been around for a couple months, that comes in around 9:30, between 9:30 and 10, um, with large iron condors, selling call spreads and put spreads that kind of define the edges for the day. And I'll show you those. I'll show you those in a minute. Let me just make the time frame a little wider. And so you see we had a local low last week at around 64.45. It was a little bit lower where we undercut an iron condor and then went back through it. And I'm not going to really spend time revisiting last week. Let's get on with today's trading. As you can see, we're in the overnight session. We're near 6,500. The expected move for today, depending on when you take it and where you took it, is around 20 points, or was around 20 points. And so at different times of the morning, it ended up being in different places. But let's just kind of call it broadly 65.0510 up here. Good morning, Boomer. Now let's call it broadly again 64.70. But you could make a case for 64's 65, depending on the delta you're looking at. And we'll look a little more closely because that's a moving target. The expected move shifts with volatility and with spots, so it's kind of a moving target, kind of an arbitrary number. All right, so let's get to the main thing that I look at, which is options depth. And what we see here is a 64.80 where we closed. Market makers are long gamma, so that's a supportive area. And so now we're around right here, 95, right near the 6,500 battle zone. And so we have this cluster here near 64.80, near where we closed, 85.80, 75. We have this cluster that as we go down, if we go down, then we would expect market maker hedging to buy the dip, send us back up. If we get too far away, then they have to hedge and sell some of what they bought that would keep us in this 80, 85 to 95, 6,500 zone. A little bit here at 6,500, that'll easily get overwhelmed. What do I mean by that? The value is roughly 500 contracts less. One big trade comes in, and and that's gone. Could be buyers, could be sellers, could be anything. The next important feature from here along the path is 6520. Customers along 6,000-ish calls more up here at 6520. So that's kind of the bull target for the day. Do we get there? Maybe, maybe not. It's always if then. And a little bit of a stall here at 6510. Again, not much, 430 contracts, so we could easily get through the stuff here. We could easily get through 6500, 6510. And so I put 6515 kind of as the top of my chop zone. That works out kind of from a delta expected move, and that pulls us up here. Once we get in the vicinity of this 6520, we have a change of character. Here, market makers are short gamma. That's why I don't like to say we are in long gamma, we are in short gamma, although I did say it in my note today. We are not in anything. I'm in New York, you might be in Philadelphia. Market makers, depending on what's locally there nearby, is what they have to hedge. Sometimes they have to hedge short gamma, sometimes long gamma, but the overall environment has to be taken into account. And the overall environment, blue is basically supportive. So while we might have some local action here at 6520, the whole general area is market maker supportive, kind of volatility compressing a little bit, kind of buying dips and selling the rips a little bit. And so you have to kind of think on multi dimensions. If we get above 6520, we have like some stuff here at 6530. So, above 6520, we get into this 6530-ish area. Buy the dips and kiss the lips, right? That's not the same as kiss my butt, right? That's a little different. And that was a loose association there. We can kind of, if we get up here, there is kind of some pull up to 6550. Not saying we get there, but there's some pull there. The base case for me is 65, 15, 20-ish max, although we could certainly test a new all-time high. And, 65, 65 on the bottom, depending on what IV does, depending on kind of outside stuff. And just like the tone changes here at 20, the tone changes here below 65. Again, not saying we're getting there, but the tone changes there. And we have basically we have, market makers short, so kind of magnets, but again, small values. This will get eaten up by intraday trading. So below 65, there's really nothing from a gamma point of view to stop it until around 64.40, 35, somewhere down here, and then another one at 25. So this cluster in the 35, 25 area, maybe 40, which takes us down to this pivot, to the Friday low. Takes us down to the Friday low. When we broke below the IC Whales puts, and then put credit spread, and then came back in, then came back above it. Okay, let's look at a few other things. Where's my other VIX thing? Okay, so here's my new toy. I don't know, they keep showing me the stupid thing. Here's my, well, not my new toy anymore, my VVIX VIX indicator, the VVIX VIX ratio, and it's in the normal range, 6-ish. We could say 6.13 is a tad enthusiastic, but not crazy. I did a write up about this. I did a write up about the equity only put call ratio, which was also kind of in the normal to bullish range. And so these kind of indicators are looking kind of decent. Let's take a look at my little volatility dashboard. Is that this one? No, where is it? No, where is it? It's this one. No, it's this one. There we go. I keep wanting to show me this. And we see on Friday, we kind of had a little VIX pop after the NFP numbers. And now we're at 15.5 VIX. 16 is a 1% move. We kind of know that, so pencil that in. So that's 1%. That's 1% move is 65 points, plus or minus. I don't think we get that. So that's a sell volatility day. VVIX, the demand for VIX for hedges on Tuesday was, that was like that post Labor Day sell off, was really high. On Friday, we almost got to the magic round number 100, not quite. And so we're kind of in a muted volatility. Some might argue slightly complacent, some might not. Let's take a quick look at where's the VIX future. Why can't I find it? There's VIX. Oh, I'm looking at the wrong thing, that's why. Okay, so here's VIX. Let's just get, well, I have the VIX futures here. Here we are. So the difference between the VIX futures and the VIX is around 1.2. And I have that on. I have another chart here somewhere. And when we have this difference here, we just put it on a 65-minute chart. Better on a daily chart. It's kind of at an extreme range, so we might expect a little bit of a pop in VIX. I expect a little pop. I think we need to see a little adjustment in the VIX space. I'll look into that a little bit more later. And there's some VIX gurus that I follow. And that's really about it. As far as looking at how we might trade this today, and then Bad Hombre is up there. And Dave, if you want to say something, um, how I might trade this. So first, from a IC point of view, so here's iron condors I sold on. So I have a fly I bought on Friday. It looks like right here at a 10 white fly centering at 6,500 just cause. And I have a debit spread here. Oh, this is my stuff for the end of the month. This is end of the month. Just kind of messing around. I didn't get a Friday iron condor in yet. We can kind of look at that too. And so what would I do today? I mean, clearly, I don't have to worry about these. These I sold at the bottom of the day. Okay, so how do I think about this? Okay, so I'd like to be below 25, but they're not going to get any juice there. 65, I would expect to hold, but it's not guaranteed. Here's the expected move area. Actually, that looks wrong. Expected move area is more like around here, 70, 65. They have a 25-point expected move. And so do I go with the Friday low holding? Sure, why not? If I wanted yeah. And up on top, we have this danger Will Robinson zone here at 65.20. Let's look at OI now, not volume. You have 7,000 contracts. Well, we know it's 6,000. And so I'd like to be as far away from that as I can. So I'll go up here and put in a wish trade at 45 cents for now. But realistically, so to speak, 25 or 30 to sell on top, and maybe a 45 or even a 50 delta on the bottom. As far as scalps, it'd be easiest to look at this. Okay, so there's really no whale here today yet. Hold on, let me get this off. Oops. There's really no whale here today. The only whalish size trade are the puts sold down here at 63.85, which we saw on Friday, which I mentioned in the room, and which I sold on Friday right in that area, kind of with a Frankenstein broken wing fly kind of structure, and which is now basically worthless. So these are kind of like the pieces left. I monetized a lot of it on Friday. I left some of it. I like coming into the day with a little cushion. So let's see. I don't know if you can see it's $600. So I'll close this out at the open at $600, and then I'll So that's where the whale is. So there's really no whale. What it looks like to me, let me go to my dashboard. What it looks like to me, and I could be wrong. Now the whales will show up, I predict, by 10:50, by 9, by 10:50, by 9, by 9:45, 10 o'clock, I'll know where the next whales come out. And then, my subscribers will get an update and maybe I'll send something out on Twitter, something a little vague. Okay, so here's what we could see. Another way of looking at it. Here's a whale down here, 65. They weren't stupid. They sold this stuff when we were selling off and everybody was crapping in their pants. Below 25, there's all these customer long puts, but that's basically worthless. It's meaningless at this point. Here's a 65.80. So there's no way, what it looks like to me, and maybe I could obviously be wrong. It looks to me like somebody could have sold the 85 puts and bought the 20 calls. Somebody bought a risk reversal, sold the puts, financed the calls, maybe sold some stuff on top of it, and it's a free lotto trade, and these 20s are green. So do they sell them at the open? We have to watch that. Um, so that's it. It's Iron Condo for Friday. Good idea because I don't have one. I don't have one either. Friday Iron Condor. Okay, so first I like to take a look at this. This is the expected move. This is from Theo Trade. It's a free indicator I found on his website like 8 years ago or something. It just marks the expected move. I just like it. It's easy. So 75-ish on top and 90, 63.90-ish on bottom. So I like to exceed that. So where's Friday? Friday is here. So let's take a quick look over here on Friday. Let's see what the gamma tells us up here. I think that's why I didn't do it over the weekend, before the week. Okay, so there's still not a lot of positioning here, but we see just selling up around the 6,600 area. So just in case of the old irrational exuberance, I like to sell wider. That's not enough juice. So let's say 65.20, 35, 55 cents. That looks like a good place to start. 15 wide. And on the bottom, nice and juicy, far away. Can I get below 6,300? Looks like I can. Yes. Okay. Now, if you're selling five wides and you don't kind of have the luxury of that, something like 63.45 on the bottom, and something like that's 30 cents ish, and something like 65, something like that. If you're in the five wide crowd, or even, well, I like to be away from the round numbers just in case. Yeah, something like something like this in the five wide crowd. If you like a more aggressive five wide, where you have kind of coverage, so to speak, you'd have to go 65.90, and let's just say 63.65, or maybe 63.70, something like this. Gives you $1 to lose four. Some people like it a third the width of the spread, which would then put you kind of in a danger zone or in a riskier area. You'd have to go here and here for roughly a third the width of the spread. I might put one of these in for science also. Okay, and I have a few things to play with over the course of the week. I know you're the five wide crowd. That's why I did. That's why I did it. And there's five wides, 10 wides. A lot of people do five wide and 10 wide, and then 20 wide seems to be the next common break. And if you look at tasty trade studies, they usually look at 10 wide, 20 wide, and 30 wide, and kind of may sometimes 50, which is almost a default strangle. And that's it. Okay, let's talk about scalp zones, and then I'll shut up and let Ben Ombre talk. Oh, and Ben Ombre, if you could put the WAP or Whoop or whatever it's called link in the chat, and I'll put it in too when you talk. Hold on, let me find. Let me go back to the chart. So we'll talk about scalps.
Let me send it to you first. I can't put it into the
Okay,
YouTube, but I'll
okay,
send it to you.
okay. So scalps. I mean the. Yeah, I want to see the reaction at 6,500, but I mean TA 101. We see all this stalling stuff over here. If over, just from a price action point of view, there's a void. Over here, we have here's like the 10, 15, 18 delta up there. When I looked before 20 delta, we also had the market maker short calls up here. So if we could fight through some of this stuff with early morning buying, 10, 15 might be a target. So if you're scalping like futures or options, and if you're trying to get an easy quote unquote 5, 10 points, something in this range, and then you have to kind of wait to see if we get to 20 and what the reaction would be. We would expect to stall above it. Um, and then, I would look for chopping here. Now, if we started breaking below 80, 80 or 75, then that's where I might look for some weakness down toward that 65 area and see what happens there. That's kind of at the bottom of the expected move range. And since we have PPI and CPI on deck Friday, um, we have Oracle this week. We have one or two other big tech names. We have an Apple event. It looks like they front ran the Apple event. It's kind of back to near its all-time high, but Apple is something I'm watching. It could always, move the needle. And that's basically it. Go ahead, take it away, young man.
Hey guys, good morning. So for me, whenever there's a big move like there was on Friday, I like to almost trade against it when there's confirmation. Uh, Usually for me, there should be more continuation to the downside. Uh, just like if you guys remember the last stream we shared Friday morning, we had a nice push up, and I told everyone I'm suspicious of a continuation to the upside, and we were able to capitalize on that downside move. Today is the same thing, just on the inverse. I'm expecting some upside if we're holding above, and these are ES levels. If we're holding above 64.90, I'm going to be long. I probably won't even meddle with shorts. I probably meddle with shorts if we get below 64.50, but that's a big if. For now, I'm going to be patient, and if I see a long setup, I'm going to try and hold that for quite a while, as long as I
Okay,
can.
hold on. I'm getting the ES chart up again, up now. And okay, so I have ES up here and I see 65.05 is where we are. So what's your setup here?
Uh, Above 64.90, I'm looking for longs. I'm basically looking for longs all day. I'll try and stay patient and keep myself away from shorts. But I will consider shorts if we start to break below 64.50.
Oh, 64. Okay, well, I don't
Yeah,
blame you.
exactly.
I don't blame you.
Yeah. But from here till then, I'm gonna be patient. Just try and wait for a good long setup, and and see if we can get to maybe 65.40. I think 65.40 looks better than 64.50.
Okay, so 65.40 would be, we're about 10-point difference. That's about 65.30 ish SPX. And by no coincidence, it's easier for me to show this. And by no coincidence, so 65.20 is 65.30 SPX. And that's kind of where we have that big cluster of market makers, short gamma magnet kind of thing, where then we would look for a reaction.
Yeah, I like when your profiles match what I'm looking here on the technicals.
Yeah, and that's what we, Bad Hombre runs, an ES scalping room in the server, and he's using, pretty much traditional price action, I guess, for lack of a better description. And we try to look for this confluence where the gamma and the price action work together. That's kind of when we get that set up, then there's a higher confidence.
Yeah, I would say anyone trading technicals, and that you're successful 80% of the time, that 20% is because you're missing this option side of it. And if you really try to fill that gap with more of the option information, option education that's out there, you'll be much more successful trading the technicals.
I would say if you're 80% successful trading gamma, you're missing the technicals. If you brush
Yep.
up on your technicals, and of course, you could parse out any percentage you want. One complements the other. It's that simple.
Yes. I think many think you can do one without the other, which if you can, great, good for you. Obviously not speaking to you, but if you're open to both, I would say that's the best way to move forward.
Yeah, and it's rare that we see a big level, say, on the gamma chart, that's not a level of some technical significance and vice versa.
Yep.
There's no secrets. Everybody kind of sees what's going on. Oh, I probably should comment on this. Switching gears for a second. Um, CTAs, trend following hedge funds, and all those kind of people are sort of max long. However, if the trend up continues, they're kind of going to have to grudgingly buy. And right now, we don't have the tailwind from hedge funds, trend following hedge funds and volatility selling hedge funds having a lot to sell. If you remember my note from June, I don't know if everyone remembers my note from June, but I certainly do. When it was kind of the end of the month in June, June expiration, end of month, and all the gurus said, and they were right, and I said it too, not being a guru, but I mean, kind of everybody sort of knew that there was 105 billion to buy over the next month, along with along with corporate buybacks, all that kind of stuff coming in. So June going into July was sort of a no-brainer setup, and it kind of continued to August. So now a lot of that tailwind of just from the flow tailwind is has dissipated. So that just kind of makes it a more neutral environment. And of course, we have the FOMC coming up, the whole rates drama. 25 basis points seems to be a gimme. Some people are saying, well, maybe 50. Some are saying, well, no rates at all. Inflation, inflation, inflation. Um, and we'll get a read through on on Wednesday and Thursday. The PPI, and I'm not a macro genius by a long shot. The PPI is producer price index, so that's the inputs into making stuff. So how much are the tariffs making it more expensive for companies to make stuff? And that's what we get on Thursday, on Wednesday, I think it is. On Thursday, we get the consumer price index, I believe it is. And so how much are people paying? And so then everybody's going to take out their tea leaves, their magnifying glasses, and their spreadsheets and their algos and decide how sticky inflation is or isn't, or how bad the tariffs are or aren't. And we could get some crazy wiggles, and then we just kind of go back to our regular trading. And that's kind of what I see in the road ahead. Oh, and just I would be remiss if I didn't mention JP Morgan collar, end of the month. It says here 22,000, but it's really 40,000. JP Morgan lays off about half of their trade to, I don't remember who, Bank of America, whoever they lay it off to. They lay it off to people so it doesn't show up in the chain, but it's there. Um, and so 6,500 is going to be increasingly sticky as we go out in time. I'm not the only person on the planet that knows it. Everybody knows it. And so, that's why if you look across the board, you see action at 6,500. So here's 6,500 across the board. You see that. And that's it for now. And I'll be having some. Okay, so do I take September seasonality into account this month? Kind of a little bit, but not really. It seems like seasonality has been canceled. Maybe it's global warming or something. Maybe it's the Trump tariffs and the interest rate things and the Fed thing has kind of canceled seasonality to a degree. But grain of salt, have to keep it in the back of my mind, especially okay. Now this month is interesting. This month we have a 5-week options expiration cycle. Normally we have a 4. So typically that opens up that window of weakness or non-strength, like kind of in the beginning of the month, the first week or 10 days. However, because of all the macro news and these funds that are coming in selling iron condors every day, that hasn't happened. That hasn't happened. And so with the FOMC at the end of the month, so we have VIX expiration before options expiration. So let's go, where am I going to go? Let's go to Gamma Edge. Oops, something went wrong, I say. Take two. Let's go to Gamma Edge. I want to take a quick look at VIX. And I should be getting some VIX market maker positioning information. Options depth is having a beta of that, and I think it should come live today. Although all you software people know a lot better than me that who knows what happened over the weekend with back end stuff, sandbox, whatever that stuff is. Okay, so let's get rid of this. So here's where the main VIX action is. 290,000 contracts at 15.5 and another 243. So we have 500,000 contracts right at 15.5 and 16 puts. So over under these numbers, the hedging would be buying VIX futures, which kind of we get those. If you notice when we kind of get above 16, we kind of get real funky over the last few days, and we kind of get below 16 towards 15, and suddenly we get some buying come down towards the 15s. So 15, 15.5, 16, and 16 and a half, even a path up to 17 is kind of where the VIX range would be, and then it just kind of depends on how we settle out. Um, Looking out into next month, it looks like 18 is the big number. 18 is where the calls are. And we have some puts sold, interestingly enough, at 16.5. I think I know what he's looking at. I think that was a fly that came in buying, I think it was an 18, 16.5, 15 or something like that. I did it. I actually did the trade. When I saw it come in, that might be what he's seeing here. At he says that market maker short that. I think that was part of a fly. But the point is, after this goes away, then there's this to hedge. And that would open a path, especially if we close near 15 and a half when the VIX futures and the VIX kind of collapse on the same number. Um, that would open a path toward 18 with the FOMC. If people get nervous, that could be your September seasonality, kind of with VIX going to 18, maybe toward 20 before things calm down. Not a prediction, but an if then. Okay, it's 9:15 already, so I'm gonna leave now and probably be back for pinball later today on Twitter and YouTube. We'll definitely be doing it uh, live on my server and trade safe.
Good luck, everybody.